So residential in general, the banks are most comfortable with. They like residential because they know it's a need. We need food, we need clothing, we need shelter. So residential homes, there is always a need for them. As a matter of fact, one of the best strategies to do is to, if you go to an area you want to transact in real estate, find the median price. Median is half the homes sold higher than that price point, half the homes sold less. I'm sorry, what? Yes. But with Uber. Okay, thank you. Sorry about that, my son. So when you find the median price in an area, you find what I call the critical mass. So maybe, like, for example, east of Sarasota, Florida, we realized homes less than 500,000 will sell like popcorn. Like you have no idea. It goes on the market, 2-3 days later it sells. So we did a little bit more research and talked to brokers and talked to people who bought homes and drove around and asked people. And we found out that a lot of people coming from the Northeast, escaping the cold and the increased property taxes, etc., and they come to that area. Well, they come all over Florida. If you ask me, they're moving to Florida like crazy. So knowing that critical mass, it's easier to get loans on it because it's residential. But if in that area you're trying to get a commercial loan to buy, let's say, to build a restaurant or to take an existing restaurant, buy it and put something else or whatever, it's a little bit harder because the banks feel like, wow, if we foreclose on this, there is less demand for it. So we want a little bit more down payment. And when we give them the loan, we need some cash reserves. So residential is basically easier. Commercial is harder when you work with banks. But which is more profitable? I find each one has its own strategy. In residential, you want to get a deal below market, below comparable sales, so you can fix it or you can quickly sell it at market or slightly below market. So if the area is 500,000 and you get it at 400 and sell it at 460, you're going to sell them all day long, especially if you know how to do creative financing. I sell them and I carry the 60,000 finance. I sell it very quickly. I can do these like popcorn all day. And here in California, I can do them at 800,000 to 1.5 million. Okay, I'm in California today. So, but in commercial, I can pay full price. The broker wants 800,000. I am paying 800,000. I've done deals where I paid them over their asking, so they don't talk to anybody else. Why? Because in commercial, I can actually add value. I can change the tenant upstairs. I can split the space downstairs. I can add antennas on the roof. I can put signage on the side. We did a training called Commercial Real Estate Roundtable, 12 different type of assets. At the end of the training, we did a session and a half. Each type of assets, how many ways to take it to its highest and best use. It's one of the best trainings we've ever done. And we're gonna do an update. You don't have to buy it right now. I'm gonna do an updated version of it coming up here in first quarter next year. And then I'm gonna let you know about it. And we're gonna take it like cutting edge stuff that you will see. If you can't make money coming up in the next 24 months in commercial real estate, I mean, I don't know what to tell you. That means you're not making offers, or you don't know how to set up a real estate fund. Because if you tell me I don't have money, go set up a fund. I don't know how to do the deals, I'm giving you the training. I don't know who to ask, I'm on the calls with you right here to answer your questions. Okay, good. I'm removing all the excuses, because the most important person to get out of your way is yourself. Nobody else is gonna be able to sustain that. A lot of people are gonna give you fear. You ride a bicycle and 2-3 people are gonna tell you, where is your helmet? Where's your helmet? Anyway. All right, so I went off on a tangent. There was more to that question about the commercial versus residential. Can you repeat the question? I'm sorry.
Yes, he said, comparing commercial and residential, what are the differences in expected earnest money for each type of asset, and what are the requirements from the bank?
Okay, so the earnest money deposit is usually, okay, understand this. On residential, the brokers or the sellers are more interested in you being not pre-qualified, but pre-approved. Pre-qualified, like Joanna is coming to buy, we qualify her, we think she's good. But pre-approved is Joanna is pre-approved for $741,000 loan. So when she goes and makes an offer, if you're Joanna, they're gonna take her seriously. Oh, Chase Bank says it's gonna give you 740 or whatever. okay, we're selling at 690. We think we're in business. We're going to accept your offer. But in commercial real estate, they're more interested in you having the money because the property has to qualify. It's not you who qualify. You just have to show proof of funds, and then you're going to tell them, look, I qualify. Let's see if your building qualifies. So what the commercial brokers want to say is, okay, so you're coming in, do you have some money? Do you have proof of funds? Because your pre-approval means nothing because it's based on the building now. Do you have experience in this building? You buy an apartment building. Have you bought apartment buildings before? Do you have a high net worth to get such a loan? You're gonna do a single tenant building. What are you gonna do with it? Are you gonna put your business, or are you gonna tie it up and delay us? And the best answer, as you all know from the joint venture, the best answer is, well, we talk to a handful of national tenants who may get the franchise agreement to occupy the building. And sometimes these national tenants, before they come and approve the location, they may tell us they want to run it under a corporate guarantee and whatever. So we'll work with them. So I need to put it under due diligence for 45 days. We're going to close 15 days right after. That's a very short period of time for commercial real estate, because most commercial go under contract 60 to 90 days for due diligence, and then another 30 days for closing, because they're usually franchisees that want to expand. So we move in very fast. You show them the proof of fund from my real estate fund, so you're taken seriously. So if you want to ease your way in, start by assigning commercial real estate deals, because in a program like the joint venture, I removed your risk. If you don't line up a tenant when you have it under contract, you don't have to buy it. Just cancel and walk away. If you line up a tenant, you have a huge upside potential. You want to buy it yourself, buy it. You want to assign it to me, you got to get paid. I'm negotiating the LOI with you. Either way, I'm happy to help. So, and then in general, the residential loans are 30 years. Commercial loans are 20, 25, and sometimes 30 in general.